Hey guys, and welcome back to the channel. My name is Elizabeth, and today we are going to be talking about investment accounts for kids. So if you're interested in this, please stay tuned to the full video. I'm going to be sharing the 5 different accounts that you can open for your child. Now, I am a wife and I'm a mama, and we opened an account for our son. We opened multiple accounts. My biggest advice is to take care of yourself first, because if you are investing, if you are taking care of yourself and your own investments, then your kids are going to be well taken care of as well, right? So even if you don't have accounts for your kids, technically by bulking up your supply and working on getting out of debt and working on building up your savings and your investments and your assets, you're going to be able to help pay for things or help take care of your child and contribute in that way. If you want a more tax shielded way or something specific that's in your child's name, or maybe that has some benefits, then this video is for you. So let's get started. Let's talk about what accounts we can set up for our kids. Right, so number 1 is a custodial Roth IRA. So you might have heard of a Roth IRA. Have you heard of this before? I've talked about it on my channel. Now, a custodial Roth IRA is for your child. So if your child has earned income from a part-time job, they can qualify for this custodial Roth IRA. I have a full video on my channel. I'll link it in the description. As a custodial account, the parent that opens the account manages the assets until the child reaches 18 years of age. So you as the parent are in charge of it until your child reaches 18, and then they get the money. In some states, it's 21, so definitely take a look at that, but you have control until then. The cool thing about this is that contributions to this Roth IRA grows tax-free. So that's the benefit of a Roth. It's an investment vehicle. And once the money is in, it grows tax-free and you can take it out tax-free. So those are the double tax advantage benefits. It is taxed before it goes in, but once it's in, it's in. And the great thing, they do have to have earned income like a W-2, but they can contribute money to it. They can contribute up to as much money as they make. There is a limit. I can pop that here. And it's a great tool because of the tax shielded benefits. So it's great to get them investing. It's great to get them in a tax brokerage account. But if you put it in a Roth, it has that double tax advantage, which you want to take advantage of. So they cannot take it out unless a major expense pops up. Okay. So for a minimum of 5 years, they cannot take it out. So that is something to think about. It's more like a retirement thing to help them in the long run. So knowing this is more geared towards retirement is a helpful tip. But your child can withdraw money from the account, including earnings for qualified education expenses, without having to pay early withdrawal penalties. So you can take it out for education purposes. So if you do want to try this account, feel free to do that. But that's a custodial Roth IRA. It's definitely something my husband and I are going to look into and to start when our son starts earning income. Number 2 is an education 529 savings plan. So this is awesome. It's for your child for college. So if you're interested in sending your child to college, this is a great plan to do so. There are no contribution limits, and you can just contribute. Anyone is eligible to open one and contribute. You can have people gift money to it. You can contribute money to it. It's awesome. There's 2 types of 529 plans. We have prepaid tuition plans where you buy college credits for the future at today's prices, which could be nice. But there's also education savings accounts where you build a balance and invest your money into the market. So this is what my husband and I do for my son and for our stepson, and we love it. So if you want to go into more depths on actually what to invest in, there's a lot of information out there. They have target date index funds and things you can invest in. There's also other ones you can look at the performance and if they've grown, if they haven't grown, etc. So I highly recommend you do some research. But overall, these are great choices. So withdrawals are tax-free as long as they're used for qualified education expenses. So this is more geared toward education. Eventually, if your child does not go to college, that's okay. There is a tax penalty, but your child will be able to get the rest of the money in time. If they end up not going to college, it can be used for other education things. What's great is it can be not just tuition, it could be used for books and housing and things. So that is really awesome. Depending on the state where you live, contributions might be tax deductible. So look at that. You can actually invest in any state 529 plan. So we looked at all the different states. We also know Vanguard has, it's from Nevada is their state. and we compared Vanguard's. We weren't sure if that was better. We live in Virginia and we ended up going with Virginia's. The benefits, the taxes, the performance all looked great. So we went ahead and did that. But you might be eligible. So go ahead and look if you can get that tax credit. That can help you out. It also is helping your child. And it's all these vehicles. So you can go to a regular brokerage, but if you want to go get some benefits, use the Roth IRA, use the Custodial Roth IRA, use the Education 529. So there's plans that are here to encourage you to invest and to prepare for your future and to help your kids. And so take advantage of these types of accounts. 3, there's a Custodial account that is an education savings plan. Now, they're not like the 529. This is another option for college, but they have strict contribution limits. The maximum you can contribute is $2,000 per year per beneficiary. Higher income households, those with a modified adjusted gross income between $95,000 and $110,000 per year, or $190,000 to $220,000 if you are married and file a joint return, you have a reduced contribution limit. So those with incomes over those thresholds are actually ineligible for the Custodial. So you can look into this. I don't know too much about it, but I prefer the 529 and a lot of experts prefer that, but we can do another video if you're interested in learning more about this. It is helpful and it's a great way. Just put the money in there, and you could also do a 529 savings plan. So it's totally up to you. It is a viable option and you do get your investments. Definitely see what it is invested in and see if it's worth it. Number 4 is the UGMA and UTMA custodial accounts. So this is common and it's not specifically required for education. So a lot of people like this. It's the Uniform Gift to Minors Act and the Uniform Transfer to Minors Act. These accounts are types of custodial trust accounts. A parent or a relative can open an account on the behalf of a child, and they act as the account custodian until the child comes of age. Depending on your state, the age the child takes the account can range from 18 to 25. So a lot of people like this, a lot of people don't. It just depends. There can be some more benefits over a 529 plan. The custodial accounts have more flexibility, and so that the funds can be used for things beyond education, like I was saying, but they do not have as many tax advantages. Withdrawals from the account can be used to pay for education, and it can also be used for anything else that benefits them. Like if they want to invest in a property, or they want to help paying for food, or whatever they need to, they could use it to purchase a car. So a lot of people like this because it gives more flexibility, even though you might not be able to make as big of a return, or you can make the return, but you don't get as much off of your taxes. So you don't get that tax break, but they don't care because as long as it can benefit their child for college, for getting an investment property, getting a house for themselves, getting a car, whatever, they're willing to do it. So definitely look into that. It's something to consider. I could do more information and give you a more detailed video on that as well. It's totally up to you. There's so many options out there, so definitely take a look. And lastly, number 5, just a regular brokerage account. So you don't have to always do the shielded ones or the specific ones. Sometimes just having a regular brokerage account or having this in addition to something else is great. Simple brokerage accounts are great for kids. They have minimal fees and they provide for a buy and hold strategy, right? We want to hold our investments. We don't want to watch them go down and sell, or watch them go up and sell them right then. You just want to keep them for the long run. So the great thing is so many of these sites now are more geared towards kids, or they have information on how to help your kids. But it's kind of just nice to have a brokerage account. It's just not going to be, they might have to pay taxes on it if it's under their name, things like that. So it's just important to kind of think about that. But if you're looking for education, I highly recommend the 529, but talk to your financial advisor or read some more books or see what works best for your child and for your family. There's other great options out there, but just getting them invested in something is helpful. And at the end of the day, if you're taking care of yourself and if you're investing for you, then your kids are going to be fine. So take care of you first. I hope this video was helpful. Let me know in the comments below if you took anything away, or if you have any questions, or if you want more details about anything else. Let me know, do you have any of these accounts? Do you plan to get any of these accounts, etc. So thank you guys for tuning in. I will be posting more videos on financial education, wealth building, success tips, health, nutrition, becoming a better person, mindset, and encouragement along the way. Feel free to give this video a thumbs up if you liked it, and feel free to comment below and subscribe for more videos like this if you're interested on this channel. So thank you guys for being here. I will see you in the next video. You got this. Bye guys.